We're here at the Press Club in Brussels today discussing the liberalisation and reform of the Ukrainian energy sector, particularly in the context of Ukraine's desire to be more a part of the European energy mix. I have Dr. Marat Terterov of the Secretariat of the Energy Charter and also founder and president of the Brussels Energy Club. Marat, one of the issues that was touched upon was the investor climate, and you raised the subject today of a lack of foreign investment in the Ukrainian energy sector and a reluctance to invest, whereas in other sectors there is a lot of foreign investment. What are the problems? Why do you think the energy sector is unique in that it seems to deter foreign investment?
Well, I think there is certainly a foreign investment presence in the Ukrainian energy sector, but it's probably not to the degree that maybe we would like to see, and I guess you have to also define who are we in this sort of context. I should say first of all that we have seen FDI, foreign direct investment, in the Ukrainian oil sector from the early 90s. So we've had a company called JKX Oil and Gas, for example, that went into sort of central Ukraine, Poltava region, and they've been involved in oil exploration and development of the oil sector for quite a while. But I guess, in a country like Ukraine, legislation or the rules of the game, as we understand them in the OECD country context, Europe, United States, Australia, Canada, is somewhat different to the operational culture, the legislation culture. What we broadly refer to as the investment climate is somewhat different to what it is, in other kind of developed OECD style country contexts, and this creates a perception of higher risk. Okay, it also creates a perception of higher reward, of course, because quite often higher risk jurisdictions also tend to offer higher reward, let's say, returns for investors. But the higher risk sort of scenario means that you have to manage these risks, you have to work with them, and of course, big oil companies are quite strong in terms of their political power, in terms of their economic market power as well. So big oil companies who go into Venezuela, Kazakhstan, these very rich, energy-rich sort of countries, upstream countries, they go in and they manage risks, and they use international treaties like the Energy Charter Treaty is available to protect their interests. But Ukraine, it's not traditionally an upstream exploration country. It's not really seen as an energy producing country. So the big energy companies generally have not gone into Ukraine to the degree that they've gone into Russian Federation, Kazakhstan, Azerbaijan, to that degree. Which kind of leaves, maybe a smaller slice of the pie at a more global level, or a lesser interest from the oil industry, energy industry in Ukraine, which means the smaller companies have to go in, like this JKX Oil and Gas, it's a London listed company, London Stock Exchange listed company, but it's not really one of the big majors, it's not an IOC. They have maybe gone in and found a niche way of working with the governments and found a niche way of managing the risks. But other, medium-sized energy companies would have been deterred by the risks in Ukraine. Of course, Ukraine signed and ratified the Energy Charter Treaty by 1998. So, by the 2000s, Ukraine had more, let's say, it was offering more investment protection to companies from member countries of the Energy Charter Treaty, which by that stage included all the EU countries, 28. So you could say that those companies would be covered by the Energy Charter Treaty in Ukraine. But again, the Energy Charter Treaty was more designed for upstream energy investments. Ukraine, the type of investments we'd be looking at, it's more kind of infrastructure. You need to rehabilitate energy infrastructure in Ukraine, maybe build a LNG terminal in Port of Odessa to receive liquefied natural gas. but that project has not gone ahead. Also, you've had a lot of Russian investment in Ukraine. So foreigners have been kind of not undermined, but let's say beaten. The Russians were quicker because they know the culture, they know the rules of the game. It's kind of, they were part of the same country until very recently. So Russians were kind of one step ahead of foreign investors in Ukraine. And of course, the gas trade, it was seen as a domain of kind of insider traders. Was seen as a domain of kind of people that know their local business, know their local stuff. So it wasn't really an area where foreign investors could really come in and participate. I guess now Ukraine is trying to be more energy efficient and trying to move towards greener energy sort of projects. So there's more scope now for alternative type of investments in Ukraine's energy sector. And so institutions like the European Bank of Reconstruction and Development, EBRD, they're offering relatively favorable financial terms to foreign investors, so non-Russian, and Russians are not going to invest now in Ukraine because of the political relations, but more favorable financial terms to foreign investors, British, European, American companies in that respect. So we are maybe starting to see a little bit more investor activity, but overall, because of the political instability in Ukraine, governments changing every couple of years and having these Maidan revolutions and Orange revolutions, and also the lack of real upstream opportunities, as well as also now you've got a lot of these border issues now, sovereignty issues, who controls Crimea. There's attractive maybe gas offshore assets in waters off Crimea, but are you going to go in there? Who's going to go in there now? Because this is unresolved territory. It's a bit of a nightmare. So all of these factors have been historically deterring and are currently deterring. But I guess the short message is that there's still opportunities, but there may be in non-traditional segments of energy, more renewables, energy efficiency projects. This is where you're probably going to be more likely to see favorable financial terms and other positive treatment.
How important do you think it is that the issue of the slowness and in some areas the lack of reform, not just in the energy sector but judicial reform? There's a lot of talk about fighting corruption. We hear words about how institutions will be established and offices will be created to fight corruption, but they turn out to be largely just words. They don't really happen. Do you think that Ukraine can ever really be attractive to investors before this problem is addressed? It's not just corruption, but the perception of corruption in Ukraine is huge.
Well, yeah, I guess perception is really what counts, because look at the on another issue, how the perception of Brexit and the Brexit vote is impacting on the currency markets. So this may not be a real reflection of the economic and trading power of the British economy at the moment, but the market has a perception that Brexit, wow, it's going to hurt us economically, pound's going to fall. So perception, you're perfectly right. And in Ukraine, it's even more so, because Ukraine, for better or for worse, but its rankings, I'm not an expert on corruption, it's not my mandate, but from what I've read, in Transparency International and other sort of World Bank literature, Ukraine's rankings have not been very good. Transparency is not very good. The government has been trying to reform all of this, but I guess the issue is Ukraine, they've really not been able to maintain a stable government. Yushchenko presidency in 2004, 2005, the government under the president collapsed within 9 months. This is a fact. One can look at it. In fact, President Yanukovych became prime minister. He was president later, but under Yushchenko he became prime minister. He was at one stage his main presidential opponent in the presidential election. So, and then of course we've seen the Maidan revolution, and we've seen a new government under Yatsenyuk. He's now former prime minister. A new government. some people, I'm not going to make predictions about how this Ukrainian government is going to go, the government of Prime Minister Groisman, but some predictions are saying, it's not going to last for more than 6 months. I wouldn't say that. We may see some stability, but overall, I mean, this is an issue which Ukraine has to not just deal with, but it has to kind of really, reinvent some of its institutions. It has to really kind of rebrand some of its regulatory culture. We've seen a discussion here in the seminar about the reform of the Ukrainian gas and electricity markets based on European rules. So we have legislation in place for that. That's good. That's a first step. But like the Ukrainian speaker here from the government was saying, what about all the secondary legislation? And then third tier is not just legislation, but reforming the operational culture in a lot of the supporting structures. So, the regulatory structures, all the technical sort of bodies that assist all these things, all the PR structures, the PR culture of how you talk with investors, if you're a government and if you're a foreign investment agencies. When I used to deal with Ukraine like 10, 12 years ago, do some investment promotion for Ukraine, the government had a foreign investment agency in place, but it was a minuscule player. It was a very, very tiny player in the bigger scheme of things. So, the media headlines are more about, kind of not a very clean privatization of a steelworks. And, this creates this view that it's not going in, let's say, a transparent way as it should. The headlines to the contrary should be like in Poland, where you have big investment, in the motor vehicle industry. Tesco or Aldi comes in and buys a supermarket chain and, creates jobs and trains people and trains culture. So we've seen, clear market transformation take place in some of these countries like Poland, whereas, the process of economic transition in Ukraine and the former Soviet Union, it's just worked differently. And we need to kind of, we need to have much more serious discussions in all kinds of policy circles, European circles, to see, how this is working and what we can do to kind of recalibrate our strategies of cooperation, with Ukrainian partners. We quite often assume that, liberalization worked in America, Australia, UK. It delivered, to the consumer, better prices, more competition. So liberalization is also going to work in Eastern Europe. In Eastern Europe, liberalization probably worked to a good degree, but it's not a silver bullet. It's not a total panacea in Eastern Europe. It has its ups and downs. A lot of economic growth is, a lot of people have done well, but there's other social sectors that maybe have not done well. So it's not a total panacea in Eastern Europe. But in Ukraine, former Soviet Union, liberalization, it's created a different, let's say, ownership base of resources. It's given assets. It's resulted, I should say, in assets going to, people that maybe are politically connected or this or that. This is kind of scientific comments that I'm giving you. So it's not necessarily produced or producing the intended objectives. And therefore, we need to also discuss strategies of liberalization in countries like Ukraine. Is it really delivering what it is supposed to deliver? Maybe we should be looking at other forms of social protections. Measure of Russian privatization in the 90s was quite often criticized because it was seen as a shock therapy. Liberalized, privatized, and that's it. But what about the institutional framework for all of this? What about the social safety net that you have to create for all of this? You can't just assume you press the liberalization button and you have, what happened in another country. All of these local factors, are heavily at play. So just like we can't assume that, democracy is not going to be created in Iraq or Libya straight away, we can't assume that liberalization in countries like Ukraine is all of a sudden going to produce a middle class like it will in Belgium or the United Kingdom. So we have to really look at these fundamental questions, which are the basic premise of our strategies of support for these countries, and see whether they are delivering. Because now we've had 20 years of reform in Ukraine, and I'm sure a lot of aspects of the country suggest that it is better off, but then again, the fact that we don't have political stability, the fact that we have such regular, unplanned or spontaneous or chaotic, conflict-oriented turnover of government suggests that something is not happening in the right way. You can argue that it's because of Russia, Russian dominance. Russians will argue that no, it's because of American interests, in this country, and all, support for NGOs and all this sort of stuff. This is going to be an endless debate. But what we need to look at is just some of the fundamental questions. Ukraine as a government, it's kind of liberalizing. Okay, is this a strategy that's going to deliver? Probably yes, but what support strategies do you need to put into place to safeguard the ill effects of liberalization? I personally do not feel that we're looking at this question substantially enough, and this is, I think, getting us into a lot more hot water than what we think.
We heard today from the Commission, the European Commission, that Ukraine is now considered to be a vital component in the European Union's future energy security. So I think one thing we're all agreed on, whether we be from the EU perspective or the Ukraine perspective, we are now very much partners in energy, in security of supply, and I think the futures are now interlinked, and so let us hope that we do see those reforms quickly.
Okay.
Marat, thank you very much.
Thank you, Gary. Thank you.